I apologize for the inconvenience here. We've had some tech issues here. Real difficult to make it simple to share this podcast with you. But let's come back here into the markets. And as I was saying before here, I want to focus on the fact that we are getting very significant confirmation that we are looking at some kind of a bottom, particularly for the wheat. Looking at the wheat, it's limit up. Um, India has canceled the exports of wheat. So we have pretty much an explosive move going on. In addition to the Ukraine crisis, that's essentially eliminating about 30% of the wheat exports. On top of it, we have India. So this is going to cause, once again, a ripple effect in the food chain. We are running into the possibility that we're going to have massive short supplies of food. The situation with regards to supply is only getting worse, particularly for food. And India canceling wheat exports puts an additional crunch, you might say, on the availability of grain to the world, to the Eurozone in particular. So we're looking at, unfortunately, the possibility that we could see massive food shortages as a consequence of this. It's going to affect all the derivatives that come from wheat. It's affecting corn, soybeans, soybean oil. It's causing a massive disruption in the food chain. And we really have to pay attention to this because it's coming in during a period of time where inflation is running at record levels and we have huge debt, uh, close to 30 trillion, if not more than that. And with regards to interest rates, which is really the focus of all of this, it's the center, you might say, of everything that we're doing here because it's basically the cost of money. It's affecting highly leveraged accounts, particularly in cryptocurrencies. People that essentially use that stimulus money or borrowed money at low rates use credit cards, credit, to buy Bitcoin, to buy stocks. So there was a great deal of over leveraging because of the stimulus, because of the support from the federal government. Just throwing free money that essentially and obviously was not used properly for the economy. It went into a speculative domain. And, we're looking at the consequences here, uh, basically highlighting Bitcoin, highlighting digital currencies, and causing a tremendous amount of loss in the digital markets that could be more than $1 trillion over the last few weeks. It's not chump change. If you're a trader, if you're a self-directed trader looking at these fundamentals, and I'm just sharing, this information, and I'm sure it's nothing new, it's in the media, it's a question of how do you take this situation and monetize from it? And that's exactly what we do here in the trading floor. And one of the tools that we use is standard deviation, mean reversion trading. Let me do a little bit of work here with the gold market, because again, 1785 coming into the low that we made last week seems to be the level that confirmed what we continue to share here for our live traders, that whenever the price is at the blue level, whenever the pivot points are trading between the buy 1 and the buy 2, which is the extreme below the mean of standard deviation, and we get confirmation by the market moving above and closing above that price, it activates a trigger point. As you can see here, when it closed above 1796, that was the level that we began to see buyers come into the market and confirming that the price is in an area of accumulation as recommended. Now, we have run up from the extreme 1-to-1 of standard deviation, and we have gone up to the mean, the target of 1812. But I want to point out to you that between the signal of 96.90, 1796.90, and the target of 1812, that's a pretty nice profit for swings or for day trader. Now the market came up here, and this is when we say carry it with a trailing stop, because this can happen and it can come back down again, test it, and find buyers at a higher level. It gave you another signal here to go long at 1800. The target was 1812. It gave you another trade. And for multiple traders, this is where obviously you can do multiples. So we getting confirmation that essentially we're getting support in the market, and we're looking for a reversion from here to the upside. We're looking at 1831, which is the weekly average or the weekly standard deviation for this week. Silver is completing the sell 1 and sell 2 targets here and trading above the weekly standard deviation of 2131, which is bullish. It has activated a bullish price momentum with a weekly target of 2320. Have a great day, my friends. Be careful, be safe. I'll talk to you later.